tech, but we have a question that has come in on Aditya Birla Group of stocks, especially after the demerger. Satyan has written to us. She says she has been holding shares of Aditya Birla Fashion and Retail for a couple of years now at an average price of 230 rupees per share. Now she's asking for a combo view on both the companies, Aditya Birla Fashion Retail and the company which got listed on the bourses yesterday, the demerged entity, Aditya Birla Lifestyle Brands. Rajesh, what will your fundamental view be on both these counters?
At this point of time, we have a avoid on both of these. The combined entity has not done anything since a very long period of time. The numbers were also not that exciting. And going forward, also, we don't believe with the kind of margins and all playing out, there would be any meaningful upsides in the stock fundamentally in the near term. So it's better to switch from these to maybe a better stock in a retail sector, a Trend or a Shopper Stop would be a better bet.
Right, so that's the view coming in on ABFRL. Kunal, coming to you, this Pankaj is writing in from Haryana. He wants to know about Dr. Lal Path. He's bought 150 shares at a buying price of 3,150. He wants to know a short-term view, whether he should be holding on to it or should he be selling it now?
I think it's a time where you can look to avoid or maybe just exit the stock at current levels. There are far better names which you can concentrate at current zone. The concern with stocks like Lalpath Labs, they may look attractive, for a certain period of time when the markets are a little bit jittery or when there is a full-on, bull market going across the mid caps and tier 2 large cap names. But then there comes a point when the markets, goes into a little bit of a churn, and in that phase, these are the kind of stocks which generally stagnate at a particular range. So I think Lalpath Labs may probably be entering into that kind of a short-term consolidation as such. I would suggest that if you're looking at slight high beta stocks, you can look at maybe alternatives like Tata Steel from the metal pack starts to look attractive. L&T Finance, AV Capital, something which I've been highlighting time and again. That's a stock which still looks attractive at current levels of 270 plus. And from the large cap names, you can either look at Infosys, something which I flagged off earlier, as well as Bajaj Auto.
All your questions answered by experts. The number is flashing on top of the screen. Now, don't forget to send in your query, your stock name, the buying price, and the holding period, and we'll get them answered by our experts. Let's resume with all the queries then. Though this question is coming from Satyaveni, who's writing from Vishakhapatnam. We'll come to this question again, but let me take this one first. Ignatius is writing from Kolkata. He's 50 stocks of ONGC. He's bought it at a price of 324 rupees. Now that the oil prices have cooled off, can I book loss or buy BPCL at these levels? Rajesh, let me come to you for this one. Now, the kind of movement that we have seen on oil itself, we touched that $80 a barrel mark and now we are sub 70. So there's huge movements in oil, and what do you think of that? And, Ignatius' question of whether he should be holding on to ONGC or start buying BPCL now. What's your take on this?
See, it's a very dicey question, I would say, because first you have to decide whether you are into trading or investment. So running after every bit of news every morning would be a difficult task if you are an investor. So if you're an investor, sit tight on a stock for a long term if the fundamentals are good. If you're a trader, then that's a different story. Coming to crude has been languishing below $80, almost 65 to 70, in the range of 65 to 70 since a very long period of time. It just a few days back when that Iran-Israel started flaring up, that it went up to almost $80. That's just a period of a week or 10 days, I would say. And now it's cooling off. So you never know whether the geopolitical tension, whether Iran, Israel, or somebody else would start flaring up again tomorrow morning, and nobody knows that. Then again, gold will go up or down. That's a different story. So don't try to chase every bit of news. As far as ONGC is concerned, it's a strong stock with a good amount of reserves, not only in domestic fields, but also internationally. They have moved into green energy too. They gave out the good dividends. Yes, crude trading at around $70 is not good news for companies like ONGC or Oil India, and they are good news for oil marketing companies. So at this point of time, yes, if the crude cools down, BPCL, IOC, HPCL would be a better bet. But you have to decide whether you are an investor or a trader, and please stop chasing every bit of news every morning, because then you would be sitting on a loss, nothing else.
That's the view coming in on several of these oil marketing companies, and as Sir was mentioning, because of the volatility that we've seen in oil prices of late, oil marketing companies and oil refiners have been in focus for the last several trading sessions. We have Nikhil Sharma, who has written to us from Mumbai, and this question is for you, Kunal. He's holding about 100 shares of Crompton at an average price of 356 rupees per share. He is predicting a target price of 372, but you tell us, so what will your view be on Crompton Greaves?
I think the target should be much higher than that. I would believe so, because it looks like that the stock is now finally coming out of a zone of consolidation, even though the breakout is yet to happen. But the way many of these indicators are poised, I would actually believe that the stock should be good for a breakout even beyond its 200 DMA, which could be the first level of I would say a target sort of a base for Crompton, and that level I think is close to 375 to 380 for the stock. So you can continue to hold on.
All right, you can continue to hold on, Crompton Greaves. But next question, moving on to the next question. This is Satyaveni, who's writing from Visakhapatnam. He says he's a long-term investor. He's holding IRCTC shares, 500 shares at a buying price of 1,032 rupees, and Canara Bank for 116 rupees. He wants to know if he can hold it, exit, or should he be averaging in? Rajesh, tell us, how should one look at IRCTC and Canara Bank?
Taking one by one, IRCTC is a strong company, basically operating into 4 divisions: ticketing, rail near, tourism, and catering. And out of these 4, in 3, they have monopoly in that. All the divisions are doing well. Even tourism, that's not the monopoly, is also picking up. Strong company, no debt, doing very well. And any introduction of new trains like Vande Bharat, etc., is a bonus point for IRCTC. They have tied up with Zomato, going on for full coach booking and all. Yet the stock has not done anything in the process. But I think the valuations are attractive, and somebody looking for a time horizon of maybe 12 to 18 months can even add at these prices for decent returns. As far as Canara Bank is concerned, I think the entire PSU banking space is looking very exciting because of the fact that one, Reserve Bank, RBI governors have taken very strong steps by lowering interest rates, giving liquidity, and all those things. And these are going to do well for the PSU basket going forward. They have cleaned up their balance sheet, and IAMs are going to improve. It's only a matter of time when credit uptake starts taking place. So Canara Bank as such is also looking very good. So both of these stocks can be added.
These stocks, Canara Bank and IRCTC, can be added at the current juncture. That's the answer that's coming in. But Rajesh, the next question is also for you, and that is on Coal India. Subrata Mukherjee has written to us from Kolkata. Now, he bought Coal India at an average price of 390 rupees per share. He is asking for your view from a medium to long-term perspective. What will your view be on Coal India?
Demand is going up. Offtake is going up. They have the largest reserve across the world, doing very well, giving out good dividend. Even the dividend yield is above 6%. And with the kind of demand we are witnessing in power sector, I think coal demand is going to go up going forward. So very strong company. If you are a long-term investor who may be looking for a time around 12 to 18 months or even higher, it's a good buy at these levels. So if you are holding it, continue to hold.
Coming to you, Kunal, this is Jaydeepa, who's writing in from Bangalore, wants to enter Cyan DLM at current price, and this is for the next. He wants your advice for the next 3 years. But current prices, Cyan DLM, is it a good buy at this level?
So I think after this phase of correction for Cyan DLM, what's happened is on the monthly charts, most of the indicators have come into a negative territory, and that generally means that maybe the stock or the correction of the stock is not yet over. So price-wise correction could be over, but the time-wise correction could probably continue for another few months for the stock price, unless the stock, I think, shows evidence of a major reversal in terms of indicators. So it's a very tough, call, frankly, because I think at current levels, I would believe that there could be a scope that the stock may go into a time-wise consolidation. I would suggest that just avoid the stock as of now. In case and whenever the stock breaks past about the 550 barrier, that could be the first trigger that maybe the stock could come back into a breakout or a reversal or a potential reversal zone. So just watch out for those levels, and as of now, avoid on Cyan DLM.
Avoid rating coming in on the charts for SAI and DLM. The next question is for you, Rajesh, and this question is on ITC hotels. We already discussed the technicals with Kunal, but fundamentally, Reshma Bhatia has written to us from Pune. She's holding about 315 shares of ITC hotel at an average price of 170 a piece. She's sitting with 30% gains, and what is the future of this stock? And she doesn't mind holding on to this position for a longer time frame. So what will the fundamental view be on ITC hotel?
We have an ad rating on this. We have recently came out with IC on this, and strong tail company. The sector is looking very good because we have all seen how travel and tourism, whether it is official or leisure, going up. Average room rent have gone up in 45,000 odd market cap, debt-free company. They plan to double their capacity by 2030, belonging to a strong group. I think it's one of the best pick in the entire hotel space, I would say. So one can even add at these levels for a time horizon of 12 to 18 months, where we believe that almost 20-25% upside would be quite possible. So it's a buy from a side. Somebody holding can continue to hold.
All right.
Stocks and all your stock specific queries that you've kept sending to us. In fact, keep sending them. We'll answer many more over the course of the next half an hour. But we have Satya Veni, who has written to us from Vishakhapatnam. This question is on HAL and Cochin Shipyard. And this question is for you, Kunal. What will your view be on Hindustan Aeronautics and Cochin Shipyard? And if not these two within the defense pack, any other stock specific idea from the same sector?
See, I think look at it this way, that the defense pack had a fantastic uptrend over the last 2-3 months due to multiple reasons, geopolitical, India specific, etc. We all know the reasons over the last couple of months. Now comes a phase where there would be many other sectors which would offer better opportunities in terms of alpha, or maybe in terms of creation of higher returns. So the money is going to move back again from the defensive pack to the other sectors. So we should now be ready for a phase where the likes of Cochin Shipyard, HAL, etc., they would come into a profit booking kind of a mode, and the money would shift back again into the other sectors. This would mean that we could be looking at two-pronged phase over here for many of these defense counters. One is a price correction, albeit a very gradual kind of a price correction, but then more of a time-wise consolidation which these stocks would probably face. I would suggest that if you're looking to build stocks from the defense pack, use corrections, and especially with a 5% kind of a correction or a 7-8% correction depending on the beta of the stock price as a good opportunity where you can look to average or buy.
All right, so that's the word on HAL and Cochin Shipyard. But coming to you, Kunal, this one's for you again. This is Sanjay who's writing in from Mumbai. He says he wants your view on Castrol. Is it good time to average in Castrol? He wants to know about this counter for the next 3 to 4 years. Now, Castrol, Kunal, in fact, this is up 2% in today's trading session.
Yeah, it's been a fabulous chart. I remember, I think, a phase where Castrol was almost at 260 or 280 some time back, and from there the stock had fallen on to 170, 175. It's picked up very well for itself. It looks like that the stock has gone through a major negative news flow and then formed a major bottom for itself around the 175 to 180 mark. So I would suggest that you can look to accumulate Castrol at current levels. Keep that 175, 180 as a strong support or a stop loss for this trade. And on the upside, if for the next 3 to 4 years the stock sustains and doesn't break below these key support levels, there could be a very strong case that the stock may come back to 280 and 300 plus mark and thereby fulfill a major longer term pattern for itself. So it's a stock which you can consider buying at current levels, but then, as I said, just keep a stop loss in place even if it's a long term play.
Okay, so that's the view coming in on Castrol, but the next question is also for you, Kunal, and this question is on Aditya Birla Capital. Kaushik Mitra has written to us from Mumbai. He's saying that the stock is at life high and oversold. What is the right price for a fresh entry? It's a two-part question. The second part of the question is with respect to Bajaj Finance. He's asking whether it is worth investing in this company. What will your view be?
Yeah, so I think good stocks, for example, like Bajaj Finance, they rarely give you those opportunities where these stocks consolidate and come into a correction. So I think right now, price adjusted for Bajaj Finance, the stock still looks attractive. But then I think you have to understand that I'm not sure whether you're comparing Bajaj Finance with AB Capital. Both of these stocks are completely different. Bajaj Finance has something which has a legacy of more than decades, and the stock has been a proven outperformer. AB Capital, of course, the price history is a lot more limited for the stock price, but then it's emerging out to be one of the better candidates in terms of a potential breakout, turnaround, call what you may want to. I would be bullish on AB Capital at current levels also, and I think something which I've been highlighting over the last many months as well as many quarters, would continue to be bullish on the stock at current levels, even though the stock would probably be into a slight overbought territory on the charts on the short-term basis. Bajaj Finance also, I think, should find a good place in your core portfolio. So I think if you're looking to build large cap stocks, then Bajaj Finance has to be one of the stock as part of your core portfolio.
All right, Bajaj Finance, a buy call coming in on that. But moving on to you, Rajesh. This is Jacob who's writing from UAE. He wants to know. He wants an investment over the next 5 years. He wants to know about Tata Motors and Ambuja Cements. Are they a good buy for the long term? And he also wants to know about the Tata Motors demerger. Now, a couple of news flows that have kept Tata Motors busy, whether it is the demerger or them coming out with the outlook for JLR. All of that news flow priced in. Tata Motors as of now, till now hasn't really done much in the last 6 months. But going ahead, what do you see for Tata Motors?
Point of time, I don't find any reason to invest in Tata Motors because of the fact that the numbers have been falling. The EV excitement which was there has been cooled off. Even the demerger story has been taken care of in the market price, and there are better opportunities in the market, even in the auto space, I would say. So if you are looking for a 5 years or kind of time horizon, it's better to be in a stock like Bajaj Auto or a Maruti. Even Hyundai gives a better opportunity than Tata Motors at this point of time, because of the fact that Hyundai is going for an expansion. They have taken a plant of General Motors in Talegaon. The entire capex of around 13,000 odd crore is going to be funded by internal accruals. They are market leader in SUV, and the Creta EV has been taken well too. In case of Bajaj Auto, not only domestic but even exports market are doing well. And in case of Maruti, as we all know, that's the market leader in EV segment. So these are better bets than going for a Tata Motors for long-term horizon. Tata Motors can be a good bet for a trading opportunities when there's a stock starts moving up. But at this point of time, I think these are better bets.
There are better opportunities within the auto sector, and Tata Motors not being one of them. That's the fundamental view coming in. We have Venkata Rao, who has written to us from Visakhapatnam. This question is for you, Kunal. He's holding about 220 shares of TCS at an average price of 4138. He's incurring some amount of losses, I believe, at this juncture. 3424 is where the stock is currently trading. What will your technical view be for this IT major?
So I would suggest that it's a stock which you can consider holding on. If in case you're looking to switch, then maybe I would suggest a switch on from TCS to say an HCL Tech or Infosys, something which we discussed earlier also. That could be a slight better bet purely in terms of getting that higher alpha whenever the IT stocks in the sector gets into a further turnaround mode.
All right, there is TCS on the charts, but let's move on from there. Coming to you then, Rajesh, this is Subramaniam Padmanabhan, who's writing about AB Capital, the shares. He holds 40 shares of AB Capital. He's bought it at a price of 107 per share. He wants to know if he should book profit partly. Rajesh, what's your outlook for AB Capital?
I think you should continue to hold, and any dip should be taken as an opportunity to add. Strong company doing very well. Almost the entire bouquet of finance in the company. Almost everything, be it AMC, be it insurance, NBFC, all are doing well. And AUM has seen an increase quarter on quarter. I think one should continue to hold. And for long term, it's an add from our side.
Rating coming in from both our technical as well as fundamental experts on this particular counter. Aditya Birla Capital is the stock that we were discussing. But the next question has come in from Anita. She has written to us from Pune. She's holding some shares of REC at an average price of 425 rupees per share. She's asking for a view for the near term. So Kunal, what will your view be on REC Limited?
See, I believe that the stock has a brilliant potential for itself. The fact is that REC and PFC are kind of stocks which generally mirror the beta of the markets, and if the markets are getting into a breakout mode, especially after this 30-31 days of consolidation, there's bound to be a phase where REC and PFC have to come into a zone where the stocks come back to their true nature of strong outperformers. I would be bullish on the pack. The news flow, the only concern with REC PFC is that the news flow over the last few months has been a tad bit more negative, and that's keeping the stock under check. But I believe that whenever the news flow starts to become slight better or the negative news starts to ebb off, these are the kind of stocks which I believe could be ready for a very big breakout for themselves. So I would be bullish on the stock, of course, with the risks attached to the stocks which I just mentioned.
Welcome back. You tune into Buy Now Sell Now, where we are getting all your questions answered by our experts. The numbers are flashing on top of your screen. Please send in your queries and we'll get them answered. So let's get going with all the questions then. Rajesh, let me come to you for this one. This is Joshi who's writing from Tiruvananthapuram. He wants to know if it's the right time to buy Nestle for a long-term investment. What do you make of Nestle?
Very strong company, very good brands, doing very well. The last 2-3 quarters has been a little stagnant, I would say, but now things are started moving up. The entire FMCG pack is looking good. As far as Nestle is concerned, they have even announced a meeting for a bonus, and that would be a plus point. And apart from that, too, it's a very good stock for hold for a long term. So if you are looking for a long-term purchase, don't wait for right time, because you might see 200 rupees up or 200 rupees down. That's a different story. But for a longer-term horizon, it's a good buy, and you can buy it now.
View coming in on Nestle, but we have Dr. Zeenat Kausar. She has written to us from Ranchi, Jharkhand. She wants to invest in Natco Pharma and Triveni Turbine with a short to medium term perspective. What will your view be, Kunal, on both these counters, Natco Pharma and Triveni Turbine?
So Natco Pharma may be a good buy in terms of risk reward at current levels, but again not an attractive chart in terms of momentum. So keep your position size or maybe the quantum at which you are buying a little bit more staggered. Let the stock confirm a reversal on the positive side, and that's where you can look to add for Natco Pharma. But Triveni Turbine, and I've actually not looked at the chart earlier, but just looking at the charts right now, I think it's a fabulous chart for Triveni Turbine, very high beta stock. So just be ready with a sort of a zone that the stock may even move into 10 to 15% kind of swings at any point of time. But looking at the chart so far, I think it's an excellent chart for Triveni Turbine. The stock is forming a bullish flag formation on the daily charts. It's still not broken past about the 200 DMA, but I think whenever that happens, when the stock crosses 650 levels, that could add to more momentum for the stock price. So that's a much more better chart, which you can probably look to allocate a slightly higher capital.
All right, that's the word on Triveni Turbine. But Kunal, I'll let you have this one, because this is Radhakrishna who's writing from Bangalore. Wants to know if this is the right time to get into BEML. Now, for a period of 1 year, the stock is down almost 6 odd percent today. In fact, it has snapped its 2-day rally. But what do you see on the charts for BEML? Is it a good time to enter?
So I would wait out. I would suggest to wait out. I would believe that maybe closer to 4,000, 4,200 could be a better range if you're looking to accumulate BEML. As I just flagged off earlier, that I'm expecting many of the defense stocks to go into a slight corrective mode, where these stocks may go into a time-wise consolidation or maybe retest their previous near-term swing lows. So I would suggest buy on dips is a better approach for BEML.
Okay, so that's the view coming in on BEML. But Rajesh and Kunal, thank you so much for taking your time out and joining us and helping us answer all our viewers' queries. But that's